Hi guys. So there's a very important concept when you're talking about freely traded and liquid markets that really is the so-called holy grail, separate and distinct from trading psychology, but really is the holy grail for um, traders, speculators who use charts, and certainly more specifically to simple traders, right? Um, my goal with you guys is to have you really look at the markets in a fairly simplistic way and take your cues from market generated information and just collect, be more or less a toll keeper, right? Grow your accounts over time. Well, um, this concept is pivotal, and one of those things that you definitely want to start getting a grasp on, so that it really becomes a part of your way of thinking, right? So this is a 4 hour S&P mini chart. I'm sorry, this is a 4 hour Dow mini chart. I thought I had changed it. This is the Dow mini. Um, but for what I'm going to talk about, it's neither here nor there. So as you can see, it stretches back all the way to the end of May. We are currently sitting on June 24th, um, and it gives some pretty interesting information, right? So we had this very nice run up here, right? We took off from here. We broke out, it's called, at 16,673, and we ran all the way up to here and topped out at 16,889, right? And then we proceeded to come back, and we fell back. Now, what's the point that I want to make today, and what I want you guys to understand, is there is a concept called support and resistance in trading, right? And it's very, very important, right? Any trader looking at this chart knew, who trades support and resistance knew that there was a very good chance that this fall could get stalled here in this area here, right? Support and resistance are not exact concepts. But this is what would be called support, right? Because this is where there was congestion recently, and people certainly were buyers, right? Because they pushed up out of this congestion area and caused prices to run higher, right? So price came back. It traded into this area, right? Again, right, and bottomed out before breaking down through what would be considered the bottom of this congestion area, and consequently the bottom of support, right? Held and then pushed higher. Now notice what happened when it pushed higher. We pushed higher, and then we ran into trouble at what we'll call, and what is actually called, resistance, right? And it's this congestion area right here where there was trouble before, right? Where it couldn't get through, tried to go higher right here, couldn't make it, turned on its heel and dropped into the support area, right? And then when we came back up, yes, we broke through right here, right? But price acted, this area acted like a magnet, and it fell back into it because the buyers were not sufficiently willing to take it through that area and keep going, right? So right now we're currently trading in this same resistance area. We're actually trying to buck it today, and looks like there's a very good chance that we will. But just know that this resistance area still holds, notwithstanding it having been broken, right? So resistance the way that to think about it is, resistance is the ceiling, support is the floor, and a big part of what you're going to be trying to do as a trader is determine where's support and where's resistance, right? So in my mind, we're currently trading at resistance. And by the way, rising markets, once we break through here, there's no way to determine where resistance is, right? Because we're into fresh highs, never touched the territory. You have no idea where sellers are going to come in and be able to turn the market. Similarly, falling markets have no real support. Once you break through support areas that have any degree of proximity to the current price, you have no idea how far it can fall, right? So that's why the concept, that's why it said falling markets or bear markets have no support, and bull markets or rising markets have no resistance, right? I guess that's enough terms for this video. But again, what I want you to get is support is where traders think the market could turn and go higher, right? It's an area of congestion, of confluence, or whatever you want to call it, or whatever it is, where folks think the market could go higher. And resistance is where it looks like the market is likely to run into trouble on its ascent, right? Let me move this over a little bit so that you can see, right? Like you would have felt like even as we took off here that the market could run into trouble right here. Okay. I hope this is helpful. Questions, ask the trader at theartofsimpletrading.com, and we'll see you at the next video.